Hello, welcome to CATEX-TV. Today is Thursday, June 9th, 2011. My name is Frank Fortunato. This is a broadcast from Princeton, New Jersey. Once again, a little note, we're experimenting with set design, so today you're seeing yet another backdrop. We also are experimenting with a new way to project photos and images as well as videos. So once again, today there will be no photos or images or videos. We expect to have that addressed sometime early next week. We appreciate your patience. This is a bit of a work in progress, and we're convinced that at the end of it, we're going to have a much better program. On this day in history in 1973, for all of you horse racing fans, the Horse Secretariat won going away by about 15 lengths at Belmont Park, won the Triple Crown. Today, the Australian actor Johnny Depp, I believe he's Australian, isn't he? Or is he British? He's certainly British or Australian. He's 48 years old today. Well, we'll go to our main news. This is coming from the Standard & Poor's conference in Manhattan that is in its second and final day today. Our friend Mike McGavick, who you can't mention his name without taking your hat off for the work that he's done at XL, spoke at the conference yesterday, and he said that the reinsurance industry continues to face the threat of punitive regulation that could force it to carry more capital as a result of the fallout from the financial crisis. McGavick highlighted, quote, an overreaction from regulators toward insurers and fears that decisions are being made without the reinsurance and insurance industry's involvement. McGavick said that the regulators have overreacted to our sector by virtue of them catching up with what happened to the banks. He said, it seems to me that banking regulators should learn from insurance regulators, not the other way around. Describing insurers as an afterthought in both Washington and in Europe, he said that the industry voice had been weak. McGavick warned of illogical outcomes from regulators. He said the fact that our industry is already struggling to justify the capital it carries would mean that a requirement to carry even more capital would strike me as a very difficult way of making this sector of the economy able to compete. Mr. McGavick is echoing something that's been said before by Stefan Lipp, by the leaders at Munich Re, saying, don't lump us in with the banking sector. And he has a very good point. Here's a very interesting story. It sort of snuck in below the radar screen. At the same conference, standing up shortly after Mr. McGavick, Matthias Weber, head of property and specialty insurance at Swiss Re, said that record losses incurred by the earthquake in Japan in March are causing the cost of reinsuring Japanese quake to soar. He said rates on recent earthquake exposure renewals in Japan have risen up to 60%. He said that the, quote, typical rate increases we've seen on 1 April are between 20 and 50 or 20 and 60%. Reinsurance rates on other types of disasters, Mr. Weber said, in Japan could rise as much as 10%. The Japanese renewal policies come up on April 1, so they've been very responsive to the disaster. Swiss Re, of course, had to abandon its full-year profit target for 2011 after incurring about $2.3 billion in pre-tax cat losses for the first quarter of the year. More than half of that came from the Japanese quake. The San Bruno, California Pacific Gas and Electric power line explosion, the gas power line explosion that killed 8 people and wiped out 38 homes back in September, for which just last week we reported PG&E had taken out a $250,000 media campaign to apologize, has another layer now. The federal government said that it's very troubling that PG&E had only recently revealed details of a leak in the same line years before. The NTSB head, Deborah Hirschman, spoke yesterday. She said that the recent disclosure of a leak in the same line in 1988 said to her, quote, if it took them months to realize they had a leak on the same line just 9 miles south of the rupture site, and we're only hearing about it now, many months later, then it's very troubling. PG&E spokesperson said that the staff members had only recently turned up the documents revealing the prior leak. I think that the more telling point is the fact that the same pipeline 22 years before the rupture was still in existence and had a leak. It points to the antiquity of the infrastructure that transports natural gas in this country. We have the roads that need to be fixed. We have the electrical grid that needs to be fixed. And underneath homes and businesses and farms and churches in the United States runs gas pipelines. Many of them are very old. News from Bermuda that Ace, Evan Greenberg, has made an announcement that Vice Chairman John Keogh has been appointed to the additional newly created position of Chief Operating Officer. He's going to take on full responsibility for all P&C operations around the globe. His predecessor as Vice Chairman, Brian Dowd, is going to retire. Succeeding Mr. Dowd will be John Lupica. We talked yesterday about the unpopularity now of cat bonds. Not so for Argo Re. Argo has begun to market a multi-peril cat bond through its special purpose vehicle, Loma Re. It's reported to be looking to issue at least $100 million in Class A notes, which would protect it against American quakes, European storms, and Japanese quakes. Each peril has a trigger point which, if reached, would put the notes on risk for subsequent events. Goldman Sachs is acting as a repurchase counterparty that had been popular back before 2008 until the collapse of Lehman Brothers indicated an area of counterparty risk in which many investors had been unaware. And trying a more traditional route, Partner Re has become the latest Bermudian reinsurer to raise capital to take advantage of the improving rating environment. They followed the footsteps of Endurance and Montpelier. They raised $325 million by issuing preference shares. CEO Costas Marantis said the company was presented with and took advantage of an excellent opportunity to access the capital markets at attractive rates. These are pretty attractive rates. Partner Re raised the capital in the form of 7.25% cumulative redeemable preference shares. It issued 13 million of them together with a 30-day over-allotment option for just about another 2 million. Well, that's the news for today. If we have any other news, we'll tell you. The American unemployment figures came out this morning at 8:30. They were not good. The stock market actually is a little bit up. Figure that out. After losing 7 days in a row with good news here and there, on a day of bad news, it seems to be up. But I'm sure that will end by 4 p.m. If we have breaking news, we'll come back and see you. If not, we'll see you tomorrow, and thank you for watching.